preference share capital, equity share capital by general reserve, and profit and loss account is there, no? It's called bonus fund. Comparative balance sheet means whether it has been increase or decrease. If this increase, there's a plus. If it's a decrease, it's called minus. Increase or decrease. When you compare to last year, current year has been increased or current year has been decreased. Hello, my dear student. I am Dr. B.S. Subramanian, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. I am going to hand Management Accounting 6th Semester Unit 2 and Session 4 in favor of Financial Statement Analysis and Interpretation. In the last session, you already know that we have already done common size statement. We already done other things regarding to the financial analysis. Today, I am going to teach one is called comparative balance sheet. What is actually comparative balance sheet? We will compare the last year and the current year. We will give the two balance sheet. Here, see that 2016 and 2017. We want to know that whether there is an increase or decrease in the concerned area. If you see that building was 13 lakh in 2016, but it has been increased to 16 lakh 25,000. We mean to say that the purchasing power of the company has gone wrong. It's higher level. Previously, it was 13 lakh. Today, it is 16 lakh 25,000. The value of the what's called land and building has been raised. Plant and machinery 9 lakh 75, 13 lakh means purchasing power has been increased. Furniture 2 lakh 50, 3 lakh 25,000. See that it increased. Goodwill at cost is 6 lakh 50,000 value. Today it is valuing 8 lakh 10,000. Bills receivable 45,000, 65,000. Current asset, debtor 65,000, 95,000. Inventory means stock 1 lakh 30, 1 lakh 60,000. Cash at bank 65, 1 lakh 30,000. Cash in hand 20,000, 30,000. Here, the preference share capital has been increased 6 lakh 50 to 9 lakh 75. Equity share capital has been increased 8 lakh to 10 lakh 40. Then general reserve 1 lakh 80,000. We keep the reserve out of the profit and loss account 1 lakh 80,000. Today it is 1 lakh 95,000. There is increase in the reserve. This shows the stability of the concern. If the reserve goes on more, the stability of the concern has been increased. Debenture 3 lakh 25, 3 lakh 90,000. Long-term loan 13 lakh, 16 lakh 25. The purchasing power debt has been increased. BP 30,000, 40,000. Creditor 65, 95. Bank loan only 60. It has been retained. Provision for taxation 45. 65, 30,000, 50,000, 35 lakh 45. Now, that should be shown in a table now. It'll go now. Liability side. Preference share capital 6 lakh 50, 9 lakh 75, increase of 3 lakh 25. 3 lakh 25 divided by 6 lakh 50 into 100 is 50%. Then 8 lakh 10,000, 10 lakh 40,000. There was increase of 2 lakh 30. 2 lakh 30 divided by 8 lakh 10 into 100, 28.40. Then general reserve 1 lakh 80,000, 1 lakh 95,000. There was increase of 15,000. 15,000 divided by 1 lakh 80,000 into 100, 8.33 increase. So if I make the owner's part, preference share capital, equity share capital by general reserve, and profit and loss account is there, no? It's called bonus fund. 16 lakh 40,000, 22 lakh 10,000, 5 lakh 70,000 increase. 5 lakh 70,000 divided by 16 lakh 40,000 into 100, 34.76. Then debenture 3 lakh 25,000, 3 lakh 90,000. There was an increase of 65,000. So 20%. 13 lakh, 16 lakh 25,000. There was an increase of 3 lakh 25,000. 3 lakh 25,000 divided by 13 lakh into 100, 25%. The total of the debt is 16 lakh 25,000. 20 lakh. If you add these two, 20 lakh 15,000. If you add these two, 3 lakh 90,000. So here 16 lakh, 20 lakh 15, increase of 3 lakh 90, 3 lakh 90 divided by 16 lakh 25 is 24. Come back to current liabilities. Bills payable 30,000, 40,000, increase of 10,000, 33.33. Creditor 65,000, 95,000, increase of 30, 46.15. Bank code 65,000, 65. There is no change in the bank code. Provision for taxation 45,000, 65,000, increase of 20,000. Proposed dividend 30,000, 50,000, increase of 20,000, 66.67. In current liability 2 lakh 35,000, 3 lakh 15,000, 80,000. There was increase of 34.04. Totally 35 lakh, 45 lakh 40,000, 10 lakh 40,000, 29.71. So just comparison. Here, comparative balance sheet means whether it has been increase or decrease. If this increase, there is a plus. If it's a decrease, it is called minus. Increase or decrease. When you compare to last year, current year has been increased or current year has been decreased. Just to know that whether the capacity of the company has been increased or decreased goes. If the capacity of the land and buildings, take an example, the land and building value may be raised. Plant and machinery, if we see that, if you go back to now, see that the purchase figure of the plant and machine 9,75,000 in 2016. But when you compare to the 2007, it becomes 13 lakh. That means the purchasing power of the machinery has gone. So that means the stability of the concern has gone. So it has been improved. The stability of the concern has been so much improved. The purchasing power of the machinery has gone up. So it shows there is an improvement in the company's stability. Even furniture, you see that 2 lakh 50 become 3 lakh 25. So there is an increase. When there is an increase, the purchasing power of the company has gone up. Means it shows there is a light of, we say that stability of the concern has gone up. Come back here. From the following information, prepare common size statement of profit and loss for the year ending. Common size statement refers to profit and loss account. Revenue from revenue is nothing but sale. Revenue from operations, nothing but sales. 10 lakh, 8 lakh, it has been decreased. Other income 1 lakh 20, 1 lakh. Then employees benefit 3 lakh, 1 lakh 60,000. Other expense 80,000 40. Income tax percentage of profit before tax 25%, 20%. We'll move on to problem now. Revenue from operations 10 lakh is 100, 8 lakh is 100. Add other income 1 lakh 20,000. So this is a 12% because no 1 lakh 20 divided by 10 lakh into 100 is 12. 1 lakh divided by 1 lakh 20 into 100 is 12.5. So base is this year 11 lakh 20,000 divided. This is 9 lakh. 9 lakh divided by 11 lakh 20,000 into 100, 112.5. Then this is 112. If you add this to 112, this is nothing but 112.5. Then come back to employees. I will repeat. This 10 lakh is equal to 100, 8 lakh is equal to 100, 1 lakh 20,000. This is no. How it is 1 lakh 20,000, 10 lakh into 100 is 12. 1 lakh divided by 1 lakh 20 into 8. You want 8 lakh, no? 1 lakh divided by 8 lakh into 100 is 12.5. So increase of this to the base. Here, it is a base. 10 lakh is the base. For this 8 lakh is the base. No? Here, 1 lakh divided by 8 lakh into 100. Here, 1 lakh 20,000 divided by 10 lakh into 100. It comes to 112. It comes to 112.5. Come by employees benefit expenses 3 lakh. 3 lakh divided by 10 lakh into 100 is 30. 1 lakh 60 divided by 8 lakh into 100 is 20. Then other expenses 80,000 divided by 10 lakh into 100 is 8. 40,000 divided by 8 lakh into 100 is 5%. If we add all these things, no, deduct this is 7 lakh 20, 3 lakh 18 is 7 lakh 40,000. 112, 30 minus 8 is 74. 9 lakh 2 lakh deduct, no, it is 7 lakh. So 7 here, comparison statement, 7 lakh 40,000 divided by 10 lakh into 100 is 74. 7 lakh divided by 8 lakh into 100 is 87.5. Then income tax 25% on this. 7 lakh 40 is 1 lakh 85,000. So 1 lakh 85,000 divided 10 lakh into 100 is 18.5. Then this is for 20%. 7 lakh and 20 by 100. Less income tax 25 by 7 lakh. Then 20 by 100 of this. 1 lakh 40,000. 25%. Another 20%. 7 lakh 40,000. Another 7 lakh. 1 lakh 40, 7 lakh 40,000, 25% of 7 lakh 40 is 1 lakh 85,000, 20% of 7 lakh is 1 lakh 40,000. So all this, no, this is 20 by 100, this 25 by 7 lakh 40, 25 by 100, 7 lakh, this goes to this. This goes to second. First year, 7 lakh 40,000, 25%. This is 18.5. This is 7 lakh divided by 20 by 100 is 1 lakh 40,000. This is 7 lakh 40,000. 25% is 1 lakh 85,000. 7 lakh 20% is 1 lakh 40,000. So out of this, no, 7 lakh 40,000 deduct 1 lakh 85,000. It becomes 5 lakh 55,000. 74,000 minus 18.5, 55.5. 7 lakh minus 1 lakh 40 is 5 lakh 60,000. So 5 lakh 55, 55, 5 lakh 60. So 87.5, 17.5 gone means it is 70. Just income revenue from operation is nothing but sales. I have given here revenue from operation may be taken as net sales. You understand? Here I have taken the net revenue from operation as net sale. Other income, other expense may be taken as non-operating income and non-operating respectively. Here we arrived profit before tax directly without arriving at operating profit or loss. So other income is added to revenue from operation and other expenses are taken under the heading expenses. So we directly go and no gross profit. Directly we have enter into a net profit where the tax has been paid. So you understand that here we arrived at profit before tax directly without arriving operating profit or loss. So other income is added to revenue from operation and other expense taken as under the heading expenses. Hope you understand this. Very easy. Very easy. Taken this as 100. This as 100. Then other income 1 lakh 20 divided 10 lakh into 100. 1 lakh divided by 8 lakh into 100. Add this figure. Expenses, employee benefit 3 lakh divided by 10 lakh into 100 is 30. 1 lakh 60 divided by 8 lakh into 100 is 20. 80,000 divided by 10,000 into 100 is 8. 40,000 into 8 lakh into 100 is 5. If we deduct, it is some before tax 7 lakh 40,000, 74. If we deduct 9 lakh, 2 lakh, it is 7 lakh. 112.5 minus this is minus 20, minus 5. So 87.5 less income tax on 7 lakh 40,000, 25%. On 7 lakh 20%. It work out 1 lakh 85,000. It work out 1 lakh 40,000. 7 lakh 40 minus 1 lakh is 5 lakh 55,000. 7 lakh minus 1 lakh 40 is 5 lakh 60. It work out 5 lakh 50, 55.5. 5 lakh 60 divided by 8 lakh into 100 is 70% work out. Hope you understand. Very easy, just a comparison. Taking 100, this is base as 100, base as 100. Hope. And here we take a revenue as a net sale. Other income, other expenses will become non-operating income, non-operating respectively. And we arrive the profit before the tax without arriving the operating profit or loss. So other income is added to revenue from operation and other expenses under be deducted. Hope you understand. We solved all types of problem. Then in the next session, I have solved comparative balance sheet, common size balance sheet, trend values. So 10 marks question, I solved all types of problems. So go through it, very easy. If we go through it, it's very, very easier. In the next session, we'll enter to say what called chapter 3, ratio analysis. So we'll meet in the next session with ratios. And till then, goodbye. Meet in the next class.